but the debt markets are not developed at all. Debt drives real estate valuations. That's the key driver. It's not, location, it's debt. That is what drives basically all the development of real estate. Very few actually take up on the opportunity. So I would say a lot of it was about, pushing your skills and being comfortable in what most people would say is uncomfortable situations, right? And so that really what I did is I propelled my skills that you learn in school. My propensity background was finance related, accounting related, business related, but without what I did at PwC, and move through kind of the chains and the chains of command and the learning experiences I got. I always say it's like my PhD in business. I would never be able to do what I'm doing today, right? And so everything I did, whether going from core audit in Raleigh, going to financial services, mostly banking, hedge funds, private equity in Bermuda, and then moving into M&A advisory or mergers and acquisition advisory kind of is a natural progression within the firm. And if you're aggressive and you're willing to basically kill yourself with work, right? So, those are those are 100-hour weeks for years. If you're willing to put in the time, you learn incredibly, incredibly fast, and they'll give you access to some of the smartest people in the world.
So how did you end up in Medellin? Because that's an interesting transition from Asia.
I came down, my brother got married in Cartagena. He had a destination wedding. And at the time I was deciding with PwC whether I wanted to go like the partner route, where you're basically doing that for life, or, you kind of have to jump off the boat, right? If you really want to be, aggressive, entrepreneurial and whatnot. So I was looking at teams either in Southeast Asia or Latin America. We only had teams doing what we did in Hong Kong, New York, and London. And I came down to Colombia. I was talking to some partners that work down here and in Sao Paulo in Brazil. And what I saw here in Colombia was a tremendous amount of opportunity. There wasn't a lot of capital. To go back to your previous statement, Garrett, about Hong Kong, the people in my sphere, they wouldn't be able to point out Colombia on a map. There wasn't enough capital flowing there, right? And so when you're used to working in Hong Kong, where the thing you have the most of is capital, you come down to a place like Colombia and you say, man, with a little bit of capital, you can do a lot. So that was the time I was about 31 at the time. That was about 9 years ago. That was a time when I said, look, I can make some bets on myself. And the worst that happens is, I could always go back and do what I was doing before, but this time I'll know fluent Spanish, if I go through with it. So, Medellin was just kind of a natural transition. It was going to probably be, I was really leaning towards Latin America with the firm anyway, probably Brazil or Colombia. Those are the big markets that we were looking for running teams in, or M&A teams. When I came down to Colombia, I said, man, this is something else. And I think there's opportunity here. So I was willing to, liquidate the IRAs, the 401ks, all my personal investments, and start betting on myself.
So did you just move out there and say, I'm going to figure out a business to start out here? Or did you already have kind of an idea of what you're going to do?
I did have an idea. What I was seeing is my background was in banking, right? And so I would see kind of loan penetration rates, the lack of mortgages, financial products in Colombia. But the real estate market, especially in Medellin, was quite developed. Like if you come down to where I'm recording from right now in Poblado, in Medellin, you'd be like, man, this is like a developed city. And so I saw very limited debt, and I saw what I thought was kind of arbitrage opportunities. So I was starting with basically real estate flips, doing distressed asset purchases, flipping deals, and then eventually got into commodities, basically running my own little commodity house, primarily with fresh cut flowers. I basically had a little trade corridor carved out for Asia. I still had relationships in South Korea, in Hong Kong, and China. I brought in a new guy that could do some trading with Japan, and no one in Colombia really has that trade corridor figured out. So I had like a little niche business, and it all kind of grew from that.
So, and then you got into coffee.
That's right.
And how did that come about?
So the same time I was doing fresh cut flowers. So most people don't know that Colombia is the second largest exporter of fresh cut flowers in the world, behind the Netherlands. And when I was doing that, I got involved with people that were doing all kinds of commodity trading, cacao, coffee, other products. And coffee was a natural one to say, hey, this is a natural product of Colombia. I came across some investment groups that were looking for basically real estate collateralized type assets, but they're looking at ag and they needed a project, right? And so that's kind of how the Green Coffee Company was created, almost as an asset management product rather than, hey, we have to get in coffee because it's massive arbitrage. What we saw was basically a deconsolidated market that was very, very fragmented. There was arbitrage buying because there was very few buyers, and there still are very few buyers of large estates in Colombia. So we found the ability to basically deploy capital somewhat at scale. When we started, it was like a $6 million raise versus now, we're raising 20, 30, $40 million at a time. But back then it was consolidate assets, basically consolidate infrastructure and sell down the value chain. And it started really as guys are comfortable with commercial real estate in Colombia and they want collateralized assets and they want to yield higher than what they'd get on, buying a mall or something like that. So that's where Green Coffee Company was born.
So we've been having a theme recently of doing like alternative investments. We just had like a wine, basically a wine syndicator on. We've had farmland. We've had a bunch of different things. I'm curious. I want to understand the mechanics of your coffee company. How does it work with for investors? Like, what does that look like?
Our background, my background is in M&A, obviously, and with PwC. And my partner's background is he's a securities attorney. So we structure everything to be dual tracked, right? So if you're going to invest in Green Coffee Company for interesting sakes, you're investing in a holding company in Delaware, right? And it holds all the subsidiaries in Colombia and all the trading companies, 100% owned. So it'd be the same as investing in an international company, whether it's General Electric, Tesla, whatever in the US, right? So you're just buying common shares in a US parent and it has international operations, right? So when we go out and raise capital, we raise 506Cs, so all accredited investors, $100,000 minimums. And then basically what we do is we deploy that capital into farm acquisitions, infrastructure build outs and acquisitions, distribution channels, and you're building a big boy company that you can either do a corporate sellout or you can throw on a public market in the United States someday.
So how do you forecast that?
Valuation forecast or forecast in strategy?
I guess valuation forecast. So like, for example, when I'm coming in, I can basically offer an apartment complex to be like, hey, we think we can get to this number by this date. And I'm assuming is you're more of like a fund structure?
Ours is more of a multinational corporate structure. Exactly what you'd see with a corporate structure of any US public company, exactly the same. So when you're forecasting returns, it would be the exact same as doing, so if you listen to any earnings call of any public company executive in the United States on any publicly traded company, they say, okay, these are my targets for the year, whether it's quarterly, annually, and we project out 3 to 5 years, depending on what we need to show, whether it's a bank or, a high net worth investor. We tailor the presentation for that. And really what you forecast valuations based on is EBITDA or net earnings multiples, typically, just like you'd value any other public company. But what's most important is what are you holding management to and what kind of KPI targets do you think you can hit, whether that be revenue, EBITDA, net income, et cetera.
That makes sense. And how do you take your operation and make sure that you have a competitive edge in order to produce the returns that you're projecting?
So in Colombia, we are the largest player in the whole country, right? So one of the competitive edges is we have full visibility of the market, right? So being the largest consolidated producer in the national product of the country gives you like a lot of access into what other people are doing. What we find in the industry, and one of the key reasons why we've been successful is there isn't really a lot of competition. We know the other major players. There's a good chance that we're probably gonna like acquire some of the other major players, but really the other players in Colombia are largely like farm owning families. right? They're not run like multinational corporates. They're run like family businesses. And frankly, a lot of them use them almost like personal ATMs, right? Harvest period is just a time to strip some value off the farms. Capital investment is quite limited. Human capital is quite limited in the industry. So I'd say, readily like obtaining access to information from being the largest player is probably the most important way we say, okay, what is everyone else doing? And how do we make sure we stay on top?